Welcome back to another episode of WithSonar. I'm Kyle Taylor. I'm joined this week by a special guest. But before we give a great intro to our Sultan here, really want to give a shout out to Luke Velasca. He just had his second child this week. And what a week for him. So you won't be seeing him this week, unfortunately. The Italian Stallion's going to be locked up at home. But Zach Strickland.
Yeah,
thank you for joining us today.
Yeah, no problem at all. Congratulations to our Luke Fiasco.
Fiasco.
Hopefully he's doing well, wife and child both.
Yes, so this was, I think they finally made it home today. So,
nice. Yeah,
so they're finally out of the hospital.
That's a fun time.
Yeah.
By fun, I mean tiring and exhausting.
Yeah, if having one kid and Luke being the second child, really, I mean, now his wife's got 3 kids at home that they have to deal with. So, Luke, if you're watching this, we miss you a little bit. Not much. See you next week. But it's a very interesting week. I mean, we have a lot of different changes happening in the freight economy. You've probably talked about it a million times, but I want you to kind of take yourself back to when you and Craig were up here debating, not last time at the 3PL Summit, but the time before at FreightWaves Live at Home, when we were looking at these volumes. What is it, 1,200 or 12,000? What was the key number that you guys were betting against?
We were actually betting on whether or not it would get over 9,300.
Oh, 9,300.
we were, and as quickly as it did. And I said that it wouldn't happen until the end of May. He was basically mid-May. It's definitely going to be over 9,300. I think it was like 9,800 by mid-May.
Right. And so sitting where we're at now, having the experience that you have, with being in a pricing position, working with an asset carrier, and seeing seasonality changes, because really that's what you're using most is your historical, and then seasonality changes with market conditions. Looking at this, I mean, how do you even conceptualize what's happening?
Yeah, well, I mean, we obviously break this down in detail on a lot of our stuff that we do, and in the various shows, but also in the background. We're looking for, you're looking at our outbound tender volume index seasonality chart there. It's nobody questions data more than I do. Right. So I'm always trying to figure out a way to explain it and understand it. And actually identified several unique patterns within our Sonar data that you can look at right in the platform. And if you're familiar with the freight forecasting show Mike Vincent does,
right,
that's kind of a more advanced, look at how do you break it down into some of the most granular detail you can. Things like length of haul. On the volume side. Like, this is a fascinating aspect of the freight market and what we've seen. So if you look at the chart, the OTVI, back in May, when me and Craig were having our debate, I was basically saying, dude, everybody's sitting at home on the couch. They're not doing anything. They're not going to be buying anything. We were seeing credit card data support this as well. Like retail, if you look at macro data, you're going to, obviously that's kind of a rear view mirror look on things. It gives you a nice overall trend analysis, but it's not great for what's happening in the middle of what we're looking at right there. That dip into April and the subsequent rise through May and through June is really difficult to have forecast, because what you're looking at there, those long haul volumes, it's that type of freight that is replenishment. So they bought up a bunch of stuff in March and April, and then they shut down for a month, and then all of a sudden they were like, oh, we need more freight. We need stuff here in the warehouse. That's just one aspect of it. So we watched, this happened, this was one of those things that we sort of saw in the trade war last year.
Right.
Long haul volumes were not necessarily the strength of the economy. It was a lot of regional, intra-region movement. And we saw those short haul volumes expand in March similarly.
Yeah.
But then we saw, a lot of the warehouse to warehouse freight. So your Ontario to Stockton type movement stuff. If you're looking at the Ontario market, which is kind of a bellwether for the last couple of years in the freight market, because a lot of imports, trade war, obviously, supply chains, a lot of supply chains move through Los Angeles, Southern California. So watching that freight market will give you a good indication of what type of freight market you're looking at.
Right.
Harrisburg, for instance, is also a good indicator of looking at. If you're looking at outbound tender volumes for Harrisburg, that's going to be your megalopolis. You know, there's a ton of DCs up there.
Yep.
You know, the toilet, Mahoopany, Pennsylvania,
Yeah.
obviously the toilet paper's up there as well. And that's more of a short regional haul. And March was that time of year. May was that long haul replenishment.
Right.
And now we're starting to see things kind of overlapping. So it's not just one mode or the other. That replenishment's kind of moving in tandem with the short haul freight as well.
Right, and I think an interesting point because, you know, being on the front line in a sales role for FreightWaves, we talk to a lot of companies that are really being hit by a lot of these, you know, by the data that we're seeing.
Mm-hmm.
And so one thing that keeps getting brought up is changing their DC to DC network and actually going from DC to final destination. And so, which could be a really good indicator for why we're seeing this long haul start to really speed up, because now we're not going from LA to Dallas to then be, you know, supplied to Louisiana,
Right.
or Alabama. It's we're going direct to the Walmarts and the different stores, you know, for consumer packaged goods in that area, which could be a really good indicator for that.
Yeah, it's actually a strong indicator, especially as, like, you know, we really had a lot of disconnection in the supply chains during this period of time, because you'd have warehouses that were shut down.
Right.
And then you have consumer demand shifting, you know, from things like Brooks Brothers to athleisure as they're sitting at home.
I do love Brooks Brothers, but you're right. I actually had to go to the dry cleaner for the first time in 4 months because my pile just kept getting larger and larger. Summer hit, can't go 3 uses on that white button down anymore.
Right.
But definitely noticed that transition, and that was a hefty bill going into.
Yeah.
Because now this is all I'm wearing now, just polo, just t-shirts and polos, but working from home, and this is my fancy outfit when I come into the office. But
Yeah, no, that apparel shift has changed. But also, like, you know, you've probably noticed the home goods stores, the home supply, the Home Depots and Lowe's of the world.
The home improvement stores.
The home improvement.
There it is. There's the word.
Sometimes you talk so much you lose your words.
Yeah.
and you know, that demand has quickly accelerated, compounding, like, really, you know, the way that, you know, when you're a company out there and you make your budgets every year.
Right.
You kind of forecast your demand out. You're like, oh, in May we're going to have this amount of lumber demand, and, you know, this amount of clothing demand is going to occur as school starts back. Well, we're not seeing traditional school start back. People are sitting at their house staring at a wall saying, I need to actually get to fixing that wall. And now all this change of consumer behavior has occurred, which has made a lot of these companies have to shift their forecasts and their budgets dramatically so.
Yeah.
And I think that's a lot of what we're seeing in these volumes, and it definitely explains things. And a few of the other data points in Sonar, such as the LMI, which measures, like, inventory levels specific to transportation and logistics.
Right.
So these are true warehouses that are not just manufacturing. They could be manufacturing, but they're spread out through other industries, you know, such as a Home Depot potentially could be in there, a Target, retail centers can be in there, et cetera. And a lot of the inventory levels are increasing, but transportation capacity is decreasing. Right. That just means that it means that basically they're not able to clean out the warehouses as fast as they're moving the freight.
Right.
And that's just really, like, that just to me signals we're going to move between warehouses. We're changing some of these warehouse facilities to facilitate whatever the new demand is.
Right, which could cause new facilities to come up or old facilities to shut down, which you'll see really a huge shift in supply chain routes, which means, you know, your favorite part of the year, I think bid season is going to come up a little early this year.
Yeah, and bid season's been a big point of contention as people have been debating those contract rates.
Yeah, no, exactly, because from a shipper's point of view, when, let's say, late April, when those rates were really in the dirt, obviously, if you were looking at the data in real time, you would say, let's try to lock in some rates, even though that would be kind of a hindrance on you, because you'd probably see your service levels fall off, because once you got into what we're looking at now, operating costs on trucks the operating ratio for trucking companies is super high. I mean, almost 1. And so when you're trying to, I mean, it's like that Amazon effect that we saw with multiple carriers, where these contracts really just made them unprofitable, and they had to shut their doors.
Right. And also it makes them very hesitant to enter into, obviously anybody that had their contracts negotiated earlier in the year, which we saw with, this massive decrease in the CAS transportation line haul index. And so we saw a rate contraction already on those contracted rates, or at least a downward pressure on them significantly. So there probably wasn't across the board decreases in rates, but bid season coming up, and we've just had tremendous highs, tremendous lows. What does that mean for those contracts? Again, a lot of that's going to depend on where we stand at that point in time with the freight market. Are those rejection levels high? If they are, I was a pricing guy, prisoner of the moment.
Right.
You always allocate a little bit of what you're experiencing in the most recent times to what you're pricing. But that being said, volatility is not an argument for lower rates.
Right.
It's actually an argument for higher rates.
Right. Yeah. Well, I mean, unless you see some downward volatility, what would you call that? Just softening?
Yeah. And I mean, obviously, if you were to have put a bid out in April, you would have gotten a pretty decent discount on your rates. But I think the carriers, too, would have been like, hey, don't come at me like that, because I'm about to they cannot price themselves out of business. And that's what those volumes would have indicated they had to.
Yeah. No, that's definitely a very interesting aspect of what we're seeing. But for someone who's playing more on the spot market, or you're going to see a lot of bids come out. If someone's never been a part of bid processes, or what are some insights that maybe you can give the Kyles of the world, who's only gone on to the load boards and said, let me add 20% onto this, or sell for the high, or buy for the low.
Exactly. So, we put that, our lane.
Is that a good segue? Was that a perfectly placed segue, people?
I think it was good. I got it. So if I got it,
yeah, I got it. Usually, most weeks we're completely obvious on the segues here. We're gonna dive in WithSonar today, and we're gonna show you a new tool that we talked about a little bit last week when we showed the Sonar 7.0 that I know you've really been a part of a lot of, and gotten to really voice some of your, what could make this better in the product. One thing that we didn't really get a chance to walk through is our lane scorecard platform. And so today we're going to really walk through that. So if you want to scan over to my screen, we're just going to bring up a quick file. And so, as I'm bringing this up, let's kind of start that conversation back over again. What are, if you just received maybe your first bid, or your first significant bid, you're finally getting an opportunity with some of these large companies because all of their lanes are probably getting reshuffled.
Exactly.
How do you go after 1,000 lanes?
So depending on whether or not you're carrier, broker, shipper, there's a use case every single one of them for this type of tool. This is basically something that gives you, from the carrier perspective, it's giving you these market analytics that you are so thirsty for, and it's condensing it into single points of information for your spreadsheet. Right. So Kyle's pulled up. You've already made your file there. You have your OD pair. You upload those into Sonar, and they spit out a load of statistics and also rate per mile. The rate per mile is the same thing that you get out of Lane Signal. Right,
which is the line haul, right?
Yes,
no emotion, no fuel, no accessorials, just really fundamental rate per mile on a lane.
And so it's going to give you, obviously what that's doing is it's got predictive capabilities up to 12 months.
Yep.
And it predicts out all our O-tries, head haul values, volumes, et cetera. It bakes that in there. It's the lane signal. But we do have a few added little perks on this one that you don't get on lane signal. And one of those is you've got the volatility risk score there, which again, just like we talked about, volatility in a lane, even if it goes down to 90 cents a mile, if it has a lot of volatility, it means it could also have a period of time where it's $3 a mile. Yeah. That's something that people in pricing will want to know. Basically, how risky is this lane in any given time of year? So.
And what we talked about a little bit earlier, which is looking at historicals. That's really where you try to identify. I mean, you're talking about produce down in the Southeast, you're going to expect tightening during these times for the reefer market. For the van market, when you start to get into retail season, you start setting up for that perfect time so that we're going to have, well, that's a good segue. Little thought in my head. Sorry, guys. Now that we're not going to have Black Friday, I think Target just announced that today as well. So now you have Walmart and Target. I was going down the retail path of trying to get all of this inventory out for Black Friday. I mean, this is once again another shift that's going to cause you to have to re-identify your lanes, reshuffle the bid network, or at least the network that you have.
Yeah, reevaluate a lot of this stuff. But it also helps you, again, if you're a broker, maybe you manage only a handful of accounts. You don't have a full visibility into the market, but you've got to run this bid and put your best bet on it, and it's going to give you a rate per mile on there. And this rate per mile is going to be closer to your buy-side rate. It's going to be the thing that you're going to try to negotiate with your carriers. Obviously, the sell-side rate is in the either somewhere. It's basically, how crazy do I feel today? How
do I want to be number 1 or do I want to be number 4 on the route guide?
How quick am I going to try to, how risk? It's basically a risk reward situation for your sell side. But your buy side is what sets you. That's what sets you for the sell side, because that's your baseline. That's where you're going to hold at. You don't want to be too high, because that puts you in a really bad spot when the market falls down.
Right.
And you don't want to be too low, because that means your carrier's not going to come out and support you when times get crazy. So that rate per mile is going to be, again, in combination with your volatility risk score and the various other signals on there.
Right.
They're going to allow you to make a much better and more informed decision over where you need to bid to make sure that lane is covered, number one, and also makes you a decent amount of money most of the time.
Right, because it's really just trying to hedge your position. You know you're going to have some valleys in that route guide of times where you're just really not going to make much margin, but you're hoping overall. Yeah. And so this does really, really wonders for the industry on looking at volatility. So there's no doubt in our minds how much FreightWaves has really done for identifying the market conditions and seeing what's changing on a daily basis. Now, what other things that maybe on a commodity level did you ever look into? Okay, well, is the product type or the weight of the freight? Did that ever cross in your mind when you were going through bids?
Oh yeah, all the time. I mean, I was LTL, so commodities. Commodities were of utmost importance. They're not necessarily as important in the truckload side, because you close down the truck and you're like, there it is. But there's other things. I'm oversimplifying it. You definitely care about what type of commodities are on the truck, depending on what it is. Obviously, there's certain commodities like, for instance, carpet, that are difficult for people to manage and pull on and off the truck. You could get stuck at consignees longer. They don't have the equipment to unload it. I'm picking on carpet because that's what we did. Yeah. But you also have bottles of water. Yeah. Again, very heavy. Not something that you really want to haul a lot of. Difficult, again, a lot of claims, et cetera, that go along with that. So the commodity does matter there. And so when you're talking about those type of commodities, you can definitely look at those low, median, and high costs in this model and kind of allocate it to being like, okay, this is going to be towards the high side of what I need to offer, et cetera. So there's plenty of use case there. And, also if you're a shipper, this is a great tool to give you insight into the mind of a carrier, for instance. Like that, they may not be... Some of these carriers they may not have sonar, and they may not understand fully what the market is doing.
And some of them might. Yeah. You just don't know, guys, when you're throwing those bids out there. Yeah. But.
And so that whole idea of trying to measure the market direction and where it is right now. I mean, there's all these little spark charts and spark lines in there that tell you that direction, historical trends, et cetera. And that's really what's driving this is if the market is getting hotter or tighter, that's a huge point to know if you are running a bid. And the shipper side, you should know, okay, I may not have as much leverage as I used to. I should be, instead of trying to, put out for rebid, on 50 lanes that came in 5% above what I was expecting, maybe I need to start targeting some of these lanes and picking them off and saying, okay, it's hot in Los Angeles this year, but it's not so hot in, somewhere else, Florida.
Right. No,
right now
yeah.
it's pretty hot everywhere. But, different areas of the country experience different levels of volatility, different levels of risk, and you can use this information basically to say, all right, we get it. You're giving us high rate out of Los Angeles. This year's been crazy. Seattle, however, dude, don't give me the same treatment in Seattle that you gave me in Los Angeles. So there, again, depending on your perspective in the market.
Yeah,
always,
your density or whatever your preference is.
Yeah, there's always a use case for information involving market conditions.
Right, and I think that's a really good topic to hit on, which is, I have 1,000 lanes. I only want to look at maybe 50. Maybe I only want to bid on 50. Maybe I only got 10 people in the office right now because we just are understaffed, or we have an increase in freight. I've talked to a lot of companies who are just really retail and consumer goods heavy, and they have too much freight.
Yeah.
And so when you got people wearing multiple hats, this is also a good way to identify that risk so that you can just quickly be able to see, okay, where are my problem lanes going to be? I mean, we did this with our API customers. And so this was our first iteration at looking at it for the user interface. So really allowing some of the smaller companies to get their foot in the game and be able to start rolling the dice per se in some bids.
Yeah, that's a great point. Like these, we talk about it from like this macro perspective. Like, these larger companies such as Target and Home Depot, et cetera, they have a pretty big perspective, given it's very focused in their niche. Some of these larger carriers, they feel like they've got a pretty good grasp on things.
Yeah, I've talked to one or two carriers who just seem to have all the historical they need.
Yeah. Even though the largest carrier in the country only has a 2%, vision into the market itself. So you're ignoring a lot of activity out there. I don't know if I'd ever feel comfortable with 2% visibility into anything.
Hey, listen, it's a big deal, okay? We may be publicly traded and whatnot, but don't worry, I have more information than you.
Yeah,
Not the first time we've heard that.
You know what? I get it. I was in that chair at one point with my company.
Yeah, I wonder what it would have been like to sell to the Sultan of Freight before he was the Sultan of Freight.
I would have been hard-headed, so I get it. I would have been hard-headed because in my world, in my niche, moving carpet, LTL, there's not a lot of information except for the day that it absolutely mattered.
Right.
And I had to learn that lesson the hard way.
Yeah. No, I talked to a couple companies last week that they said that exact thing. Can you tell me what's going on in this market? Sorry, I can't give it to you. You'd figure it out. But I don't know what happened. I used to have all of the capacity in the world, and last week, it's gone.
It happens overnight. It happened to me, and I got to hear about it from the president of the company.
Yeah.
And I had no good answer. He basically was like, well, it's your job to know when we're going to have these fluctuations in the market. I'm like, well, you point to a tool that I can use that'll tell me this. And he's like, well, they should have told you over here. And I'm like, then it got into the big finger pointing mess, and nothing ever changed.
Yeah.
But it was a mess, and we lost a ton of money, and we also left a ton of money on the table.
Right.
And I didn't, I kind of grew up in this more stable environment, where the market was kind of growing steadily for several years. Those days are done for at least the near term for sure. And I had to answer a bunch of tough questions about how I had no real way to measure it. This right here, if nothing else, gives you something to point to, because I could have said, hey, my market analytics table said that this is what was happening and this is what's going to happen. And, from a data perspective, he couldn't have argued.
Right, and I think I don't think this is exactly what we hear. People like to look at this, well, just give me a rate per mile. That's all I just want to know rate per mile. And so really what this is giving you is the validation to be able to, one, go back to your customers. If you're going to, and we've heard this countless times just in the past couple months, if you're going to get if you're going to give your customer a rate increase, have some data to back it up.
Yeah.
And that seems to be the winning argument. It's capacity's tight. Well, why is it tight? Well, look at this third-party data set that is unbiased. Or my carrier team called like 10 trucks and no one's covering that freight on the load boards. That doesn't sound as pretty. If I'm trying to be a professional logistics provider, what would you say yes to a rate increase on?
Yeah, and you can actually present it to them.
Right.
And say, hey, look, here's what the market's showing me. And they could be in an industry that has no visibility into aggregated information in transportation, may not even care.
Right.
But the fact is that the transportation market is agnostic in terms of when capacity gets tight and where it gets tight. I mean, you could be a carpet hauler, or you could be, somebody that hauls for Home Depot. Things that move independent of each other are related in the way that when there's a hurricane that hits the Gulf Coast, capacity goes away for all of it. And if you're over there covering this surge of Home Depot freight, but yet, you've been comfortable hauling Nestle Waters for a long period of time, and all of a sudden Home Depot, their supply chain has completely been shifted, dislocated. They're gobbling up. They're paying $3 a mile in lanes that were getting $1.50.
FEMA loads start coming in. Trucks are positioned.
That other freight, and you're like, well, wait, we're not seeing any growth.
Right.
You might just be going about your business, but you have no visibility into that. And that's what this platform is really trying to get at, is there is a blind spot in the transportation industry.
It's always been. Yeah. I mean, what's the, it's a good old boy system, and it's the, that you have your historicals, you have your market data, which, up until FreightWaves has been still fragmented.
Oh, yeah.
And then it's, dial a carrier.
Call them up. Hey, or my favorite is, I heard.
Hey, I got a couple buddies who run trucking companies that we talk to, and they're feeling the same thing. So that's how I validated what my rates were.
Yeah.
So one, my carrier reps or my brokers told me that they can't get it covered for that much freight. Two, I called some of my buddies who run the same freight, and they're saying the same thing. That unfortunately that just doesn't cut it anymore. The market's changing.
Yeah, well, you should.
And expectations
always,
are changing.
I mean, again, I'm a data guy, so I always strove for as unbiased and objective data set as I could possibly find.
Yeah.
Something that was aggregated, mixed with other things, and if you're running bids and you don't have a clue, like if I'd have had this tool back in the day when I was running my first bid, I was nervous as all get out when I was running my first bid. Because
you're about to grant how much capacity. Yeah, I can imagine. I'm going to be the decision maker on 600 trucks for the next year.
And when capacity fluctuates like it has, I have zero backup on whether or not, you left too much money on the table, or hey, you just overpriced everything and we won nothing.
Right.
That's such a nerve-wracking experience, and obviously this tool helps adjust that. It would have been way better. I mean, I can't put it into words how much of a stress reliever it would have been to have something like that.
Well, people, you heard it here first from Zach himself. If you want to learn a little bit more about how this can maybe affect your business, feel free to shoot us a call, reach out to one of our sales reps, and we'll be happy to walk you through, or maybe do a quick evaluation of your personal lanes. Now, before we take off today, you have a segment of your own. Do you want to kind of tell the people a little bit about Freightnomics and what they can expect by tuning in there?
Oh, I mean, yeah. So every Wednesday, 2 p.m., Anthony Smith, lead economist, and I have Freightnomics. And if you are interested, if you are kind of that freight transportation market nerd, or just interested in supply chain dynamics and how they interact with the freight market. I know there's a lot of people out there that are in the industry, in the business. I myself was one of them back in the day that had no idea how the overall economy interacted with the transportation markets, freight markets in general, what to expect. I was a financial analyst for a period of time. I had to run budgets. All these types of data points and information. We also break down things that, like earnings to an extent,
right.
Make it more approachable too. We don't just sit there and break down an income statement
and you also have some really good visitors as well from a lot of the universities.
Yeah, the people that create some of these indices, Zach Rogers from the LMI, Logistics Managers Index, joins us from time to time. We've had, the Powerfleet CEO came on and gave us his perspective. He was super interesting in the way that he had access to all this telematics information and could really see in a very objective manner.
Literally see exactly what's going on. Well, awesome. Well, feel free to reach out to us if you want to learn a little bit more about Sonar, and we'll be happy to help. And as always, thank you guys for your time. We'll be back next week. We'll see if Luke will make it back. I don't know. I think he's got a couple more weeks off, so we may have a new visitor next week, or we may have you again.
We'll be here next week. I'm going to go storm the hurricane next week.
All right. Well, you heard it here. You watch your local news, and you'll see Zach there catching some waves. I hope you guys have a great rest of your week. And that is all. Have a great day.